Hi, it's Jerimiah Taylor with the Taylor team here at Keller Williams. And I want to give you an update on what's happening in the real estate market across the three markets that we serve in the first quarter here in 2021. Now, there are no shortage of news headlines about the craziness in the real estate market, and we're hearing tons and tons of stories of people paying 10, 20, 30, even 40% over the list price on homes across these markets. And so I'm really excited today to dig into the numbers and see what story the numbers tell us. So let's do it. We'll scroll down here and let's start with Tucson on the left. If you see where Tucson is, this is as of the end of March, all first quarter sales for this year versus all first quarter sales for 2020. And keep in mind, we hadn't really begun to see the pandemic effects in the first quarter of last year in the real estate market. So going into the next quarter, we expect the delta to be massively exacerbated. But for the first quarter, it's a fairly direct comparison because the pandemic really started to affect us like mid-March is when we got the slowdown last year. But let's look at what's happened in pricing. Across all three markets, prices are on fire. Tucson up 21% year over year. San Diego up 15% year over year. Austin up 34% year over year. Now, mind you, Austin is one of the hottest, if not the hottest, real estate markets in the country. You've got lots of high tech moving here to Austin. So no surprise that that's leading the charge in terms of price appreciation. But even so, 34% is a huge number for any buyer to get their head around. Let's look at what's driving that, though. So across these three markets, look at your active listings number. Tucson down 70%, San Diego 64%, Austin 72%. Just to make that tactical or tactile, if I'm a buyer and I was looking for a home a year ago in any of these markets, this means that 3 of the 4 potential homes that I would have had available to me to look at as choices last year are gone. So 3 of 4 choices in terms of inventory choices have been eliminated from the market because there's roughly 70 to 72% less inventory in Tucson and Austin, and about 65% less inventory in San Diego, which a lot of that inventory is the cause that's driving prices. Now, what's interesting, listing volume kind of flat. It's down 10% year over year. In Austin, it's actually up 2%. That's great news. But overall, listing volume in Tucson and San Diego is a little worse than flat, down 10% year over year. In Austin, it's down 2.4% year over year. I think that's really an interesting number to look at. But when you correlate that listing inventory with what's happened in terms of pendings and closings, so pendings in all three markets up 16 to 20%. San Diego's up 20, Austin and Tucson up 16, 17. Closed sales, Tucson up 7, Austin and San Diego both hovering right around that 10 mark. And so what you're seeing is that's all driving homes to sell faster and for more money. So when we look at faster, homes in Tucson and Austin selling 41 and 51% faster, San Diego about 30% faster. The market's moving, folks. I think really the net of this is very easy to understand. There's less supply, there's the same or more demand, and prices are getting pushed up. Now, that's all being exacerbated by the materials shortage and material price increases from all the supply chain disruption from the coronavirus that we continue to see. There's really not a short-term end in sight for that. Lumber prices have tripled year to date, which means on your average home across the country, that's added about $35,000 in lumber price to that home, which if the average home year to date is roughly $300,000 nationally, that means that there's a 10% lumber price tax on homes that have been built in the first quarter of 2021. It continues to amaze me what we're seeing happen. But when we scroll up, let's look at what's driving it. This is a very key factor. Interest rates have continued to drop, and they hovered up above 4% and have kind of come back down here into starting the second quarter of 2021. You can still get a 30-year mortgage in the threes, which mortgages in the threes, tons of financial stimulus, shortage of inventory and prices. Voila, you have 20% to 35% year-over-year price growth in these amazing markets. So if you're a buyer, rates aren't going to get any lower. Houses for the foreseeable future are not going to get any cheaper. Get in touch with us today. Every day we are finding properties that are off market before they hit the MLS, so that you can get in there, get your offer accepted, and get a great price on one of these properties and not have to be one of 150 offers. If you're a seller, wow, I shouldn't have to say anything more. Call us today. Let's get your house on the market. We will get you tons of offers and help you get top dollar. Now, if you're a seller and you don't want to mess with that and you just want somebody to buy your house for a fair price, we've got buyers, we are buyers, and we can help. So it's a crazy market. Stay tuned. More to come. It's Jerimiah Taylor, Keller Williams Realty, signing off.